Hey, what's going on, guys? It's Will. How is everybody doing today? It's been such a crazy evening. I was just actually working on a car for a moment. Had a friend. You can see I have some stuff on my face actually. Even I don't know, or my hands even greasy a little bit here. I got most of it off with some Dawn soap, but helping a friend replace a starter on my car, which is funny because I haven't it's been a couple of years, but kind of felt like I was the dad in this situation. Usually, I was the son growing up when my dad used to help me do stuff like that, and I'm helping this gentleman because he needs a car running, and we have a car, but doesn't have a reliable starter. So we said, "Hey, you could borrow our car if you fix the starter." But then I got a little bit roped in this evening. Oh man, it's been fun though. Okay, so how is everyone doing this evening? We are going to go over the top 5 AI companies. It's really nice to go do some stuff that's totally mechanical and unrelated to super high tech stuff, and then come in and look at AI companies because currently there is this super mega ultra fast semiconducting market that is AI. It's driven heavily by data centers. You have some of the top companies that are building these supercomputers. You have the configuration of the data centers with TSSI. You have large companies like APLD and CoreWeave and Supermicro Computer building some really nice data centers. And data centers are one part of the market, but I want to go over general AI stocks. A couple big movers today. Meta having their earnings today, they're up 6%. We got Tesla with their earnings today, they're up 2%. And then we were trading Symbotic as well, as you guys saw earlier today. Big Bear AI had a pretty good day, up over that $6.50 level. And so we're going to talk about some of the top AI companies. And as we do, feel free to comment your ticker symbols if you have some that you would like us to take a look at. But I'm going to start it off here with some of our top AI companies. Now, one of the ones I want to go over really quick, Tesla, right? Tesla is going to be in the robotics space and are seen almost more as an AI and robotics company recently, as opposed to being seen as just a car company. Obviously, you see a lot more growth. You see this very consistent uptrending pattern. They recently pulled down from all-time highs of $500 a share down to about 412. They're now up to 440, and you see them get some momentum today. And Tesla stock, if you look at Tesla stock's recent earnings, they got a market cap of $1.3 trillion. And in their recent earnings that they just came out with here, you can see Tesla ending Model S and X production, and they're converting their Fremont factory lines to make Optimus robots. That's right, they are slightly decreasing the productivity on the Model X and the Model S production centers, converting them to Optimus robot factory lines. So, they're going pretty heavy on the robotics side. We were just talking about earlier today, the robotics market's having a really good growth opportunity in industries such as the department stores and inventory, and seeing large companies automate the robotics. You got Amazon automating a lot of their delivery. You have Walmart now automating their e-commerce, and you have Tesla now saying we're going almost full robotics. We plan to have these Optimus robots that are human-like humanoids, you could say, being deployed, and their profit though took a huge dip. As you can see, Tesla profit plunges as sales fall and AI expenses pile up. It's not a negative thing for the long term. They're quite okay. But if you look at their current revenue decline 3%, operating expenses soared 39% as they doubled down on the AI and the robotics. And as sales drop, they also just basically, you could say, pick up shop related to the Model Y and the Model X, not the Model Y, excuse me, the Model S and the Model X. So Tesla's recent pullback, though, we see them pull back. We'll see how much downward pressure they have after these earnings. The earnings didn't look bad. It's just they did have some expenses increase and the profits again narrowed. So if they do drop, they have a support level. You can see some of this rising support trend. I think it would be pretty conservative to say they sell down further here. But I just want to give a quick update as I do hold this company long term, and I don't talk about them much because they're pretty mainstream and we like to cover some of the smaller opportunities. But Tesla is still looking good long term. But again, just watch that level there around 420, 440 as they may have some downward pressure after this recent earnings that they came out with. So let's take a look here as well in the chat. I want to see what you guys are following. The next AI company I'm watching into February, I think is going to be really bullish more than let's say Tesla, is going to be over here in the robotics market. And we talked about them just a little bit earlier today. And the company's name is going to be SYM. So if we go over to the robotics, here we are, robotics here. You can see it's SYM. We entered a little bit of a trade here. Looking at this recent dip, we're looking for a recovery. This robotics company has been growing very fast because they've been deploying these automated systems that are robots that operate the back-end warehouses for large corporations. So talking about Target, Walmart, Albertsons, and many others. And they are automating the back-end warehousing, loading up trucks and doing all of the inventory with robotics on autopilot. See, they have forklifts and everything else, which is really powerful as well. And I am also seeing that their profits are doing really well. Profits are up to 600 million right now per quarter, or not profits, revenue, which is really good. Let's see what the chat says here. I'm going to jump in and see what you guys are talking about today. Let's see, what are you all looking at here? Curious what everybody is focused on currently. Let's see here. Dun, 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 dun. Okay, let's see what we got. Okay. Excellent. Okay, so you got Palantir, Redwire, so that's in the defense market. CoreWeave, definitely seeing some growth with CoreWeave. Hostado, how are you doing? Hyla, how are you doing? All right, Zed, how are you doing? All right, so SoFi, you got SoFi reporting tomorrow. I was just looking at that. So one thing to note here, as you guys can tell, if you guys can see kind of what's going on with the exciting earnings over in StockMate. But we're looking at some of the top earnings. Again, we had Microsoft, Meta report earnings, Tesla just reported earnings, and then you had a large anticipation for MasterCard tomorrow. That usually gets a good consumer spending outlook, and then also Apple. And then you got SoFi on Friday, along with Chevron as well. So you got some pretty closely tied high impact earnings right now, as Tesla just reported, and then you got Apple. So I see Serve Robotics. Ian says Serve Robotics, and then you have Serve. How is Serve looking? Any chance increasing your mic volume? Is my mic too quiet? Let me see, Rich. Let's see if I can get my mic louder for you, Rich. Testing 2 1 2. Testing my mic for me and you. Everything good? Can you hear me fine? Is it loud enough so that you can hear me just fine? All good? Okay. So as we are jumping into, the next AI movement that we're seeing, it's got to be the robotics markets, right? So again, Serve Robotics could be in that same conversation as Symbotic. Symbotic, I like their revenues really increasing balance sheet looks good. We talked about why we're kind of entering in on this trade earlier today with Symbotic was because they're down to that 200-day moving average. They've seen a lot of growth in the financials, and we're really liking the growth happening in that market. And so as we kind of focus in on not just Symbotic, but we start to look as well over at some of the other AI robotics companies. There's another company that I'm following as well, and we just kind of saw it in the chat a few times, and that's going to be Serve Robotics. Now, quick preface. For the most part, when we cover companies, we're looking to cover companies that are actually already making money. I know that there's a lot of companies that are starting to get traction, but I would like to do analysis on companies that are already seeing growth. And that means that they're already seeing some profits, or they're seeing a very large balance sheet. And so a company like Serve Robotics, I'd love to see them. I just went to LA and I was going through the streets and I saw that they had the Serve Robotics delivering the Uber Eats, and it's really cool, but it's also still in startup phase, and it's also still seeing some time for them to develop, and they haven't seen a huge revenue increase, but they have some upcoming, or but they have cash. So just kind of quick preface, when we're into these smaller companies and the financials aren't really lining up, they're pretty high risk. So I like Serve Robotics. Again, I hold the company long term as well, because I think it could be a good play. But even so, I'm not really encouraging anyone that they should look at this company for any long-term plays, because there's a lot of uncertainty. So currently, you can take a look at Serve Robotics. They're running up from $1 a share to now $12 a share this year, and this company is really volatile. We see 40% swings. They make these runs up to $21 a share. It's a 100% increase, and then sometimes they sell back down. But even so, year over year, they're really growing pretty significantly. And why is that? Well, we take a look at Serve. There's two ways I want to look at it. Number one, take a look at their website. They have these robots, right? And they look like this, and they're deployed at major cities throughout the US. And they are being deployed, and it's becoming out of control. It's out of control how many there are. They are doing robberies. They're robbing people. No, I'm just kidding. No, it is insane how many robots they have deployed, though. They're pretty friendly. They know how to walk around on the streets. They know how to roll around on the streets. They know how to go through the cities. And they get the food from the restaurant, and then they drive to the house, and then they go to the house and they knock on the door, or they go by the door, and then the person comes out and they grab their food. Okay, so what they're focusing on, low emissions, delivery robots, low emissions, and that they are able to deliver food to help humans. Now, one thing to note, and I got to run through the math once again, and I almost want to get my iPad out and really look at this, but my thought initially was this is going to be huge, and it's going to be everywhere, and you're going to see these deployed, and they're going to deliver the food for everyone. But then after a little bit of thinking, I thought that could be the case, but the startup cost, at least right now, for one of these robots is pretty expensive. And so it's pretty cheap to just have somebody else do it, a human, and then pay them. And then, a human, I guess, maybe you have like a couple weeks worth of work until it would be the equivalent of you would save money. So maybe they're getting their money back on these and it makes sense. But I do imagine a lot more upkeep. I imagine a lot more, expenses up front. I imagine that they might not be, this isn't a problem. The value to society could be good, but also just thinking about local economy, you might not have them be adopted. I did notice that, when I went to get a Serve Robotics order, they were more expensive and took longer than a human. So that was something. But, one of the things, Uber Eats, 7-Eleven, NVIDIA as an investor, why is that? Well, as you can see, Serve Robotics has a good amount of cash. They are gearing up. They're under $1 billion market cap. the market they're tackling, that food delivery space in the United States and the different markets they're going after, is about a $20 billion market. Pretty large market. They're currently under $1 billion in market cap. Let's say that they get 30% of the market. That potentially could mean that they would be around a 7 to $10 million or $10 billion market cap, which would be a 7 to 10x from here potentially, seeing them at like $50 a share to $70 a share. But I think that that's pretty risky. Revenue negative on the net income, only about $685K per quarter. They're ramping up their capital, but really they're not seeing a profit. So I really like the company kind of like as a long-term super wild card type of play. And looking at their chart, it's quite possible they continue some of this uptrend here, and they have swings of around 50 to 100%. But it wouldn't be something that I would really confidently put a large sum of money into. I think there's a lot more companies, and there's a comment there from Ryan says, plenty of money in already profitable companies. See IREN. It's a good kind of outlook, right? There's other opportunities that might make more sense. This would be one that could be having that 50 to 100% upside, but it requires a lot more probably emotional control. You got to manage risk because it can drop just as much unless you're just forgetting about the company, buying it and hoping it does good over the next 2 to 5 years. That could be good. So the next one is going to be IREN. And I haven't looked into Zeta stock, David. I'll have to take a look there. Brian, what do you think about biotech stocks? Heard quantum is going to be used for all sorts of things in biotech in the future. Personally, right now, I haven't found any very valuable biotech stocks. But I think that it's interesting. It's starting to become a little bit more popular at CES. And biotech, I'd have to get a better look at them. I don't do pharma. It's not something I cover because there's a lot of manipulation in that industry. But when it comes down to IREN and getting into some of the data center AI providers, really like them. So if I'm going to just start off kind of broad on the data center market, they're seeing a lot of growth. You got government shutdown Saturday potentially here. Japan bonds, government spending will be stalling, which might again impact defense contracts. We know that to be true. It happened this last year during the part of the government shutdown. AI companies did okay, but defense companies really struggled during that time. So that could be something rich for sure. I think that's a good thing to thinking about. Selling covered calls. Yeah, I mean, I think selling puts. Selling puts could be potentially a good strategy if you're just looking to have a more conservative approach. When it comes to the outlook for IREN, okay, let's take a look at IREN. They were down about 1.29% today. Big time spike as they rally up here, and they made a 17% gain that we were looking forward to. They did continue to rally upwards as they continue to roar up into the $63 price point. Curious about IREN here over in Prophecy AI. I'll pull it up. Okay, so you got some bullishness over the next month or so. Some of the company news, CoreWeave is in the same conversation. You got some analysts that are still bullish on IREN. It's in the same conversation as Nebius, in the same conversation as Wolf stock. And if you are looking at the data center market, one that's not in the conversation but that we really like is going to be TSSI. We've been watching it hold that support level around $10. TSSI configures the data center wiring and everything else, the configuration, and they've been looking really good. They're at a support level now around $10 a share, so they're looking pretty good. What I like about the data center market with a company like IREN is that it's pretty guaranteed that they're growing. You see that and they're in a high growth market. You see that they've signed, for example, a $9.7 billion deal with Microsoft. All right. They have increased the financials. They've been growing faster, and the cloud market and AI market is growing faster than almost any other market. And as they've continued to build out their growth in the financial aspect of the company, basically the whole financial aspect is that they've had more cash come in, and they've also seen more revenue increase as well. And so if you look at some of the recent investor news, they did do that $2.3 billion convertible notes. That could scare some investors. Sometimes when there's raising of money as well, people get a little bit scared. But there it is, the $9.7 billion AI cloud contract with Microsoft. This is a really large deal, all right? Because 9.7 billion, when we're looking at IREN from a financial perspective, once again, there's that income. Look at that net income. 360 or 384 million positive net income is a big deal. This company is gone literally from negative 51 million in net income in 2024, negative 51 million, to then just recently reporting 240 million revenue and 384 million in positive net income. Balance sheet's gone up. They got 4.3 billion in total assets with liabilities less at about a billion. So they've got plenty of cash. They're ready to grow. They just are crushing this data center market. And so as they're recently, you can see they're potentially eyeing those previous highs that we saw back here up to that $78. If you get up to $78, then it's about a 25% increase. Pretty big increase in just seeing where they've already been. But in this shorter term trend, we see they kind of look overbought. RSI, MACD overbought. So I want to watch them at market open. I hold this company long term. I really like the company. I think that they're going to continue to grow as they have those contracts with Microsoft, Google, and others. And potential downside right now, about 8%. They do have a support level here about $55 a share. So they might sell down as they notoriously have some volatility. So you would want to brace for that and potentially be patient if you're looking for a short-term trade, or it doesn't matter, just have clear risk management. But ideally, you're getting a little bit better entry on a short-term trade, as you could tell, kind of up near that resistance level. In their overall trend, it would make a lot of sense. They pull down a little bit first, so conservative approach there. But overall, in the longer term, entry, exits, we're looking at just market cap right now of about 18 billion. But when you're signing $10 billion deals with Microsoft, you start to get into these numbers where it's like, okay, what's next? 100 billion? It's just the start. They're already up in those levels. So really key growth for IREN right now. The key is that their data centers continue to perform well, as we have seen. There have been some delays, especially with this recent snowstorm. You got a big snowstorm. It's been documented that a lot of places got hit with more snow than they've ever seen. And as a result, you have some of the data centers getting delayed, just like the big rain monsoon season that happened over in Texas. That actually had some delays on IREN data centers as well, as they are exposed to some of the weather. So the weather is playing a little bit of a role. Normally wouldn't be a problem, but when you're factoring in the speed at which NVIDIA is looking to grow, and Dell and Supermicro or Microsoft is looking to grow, you factor in the demand of what these companies want, and you have a 60-day delay or 90-day delay is actually pretty large. It's like a whole quarter, right? So it can really throw off things for some of the companies. But we didn't see that really reflect in the Microsoft earnings. They still, Microsoft isn't heavily reliant on IREN, but they again invest about 10 billion in IREN building the data centers or getting those data centers, cloud computing infrastructure built for themselves. So things look good there. DGXX opening a new data center, North Carolina. Wow, pretty cool. I'll have to write that one down. Thank you for sharing, so we can cover that soon. Yup. Ryan says, when I said IREN, it was in agreement your comment about companies already being profitable and having still good opportunity. Yeah, exactly, right? So IREN is already seeing positive net income. You don't see that a lot of times in the AI market, but they are seeing that. Some of the projections over the next few months, it's pretty amazing. With Grok, at least, you got 22% increase. I know Claude was like 50% into 2026. Things are looking okay. You see a little bit of a correction potential over the next week here. We were just talking about it, right? And according to Grok, this is a projection here for the future, guys, using Prophecy AI. And you can see that the projection on the next week a little bit negative. Once again, just kind of tying back to this, that potential pull down here. They're at a resistance level, so the near term, the next week might be a little shaky. When you go into the shorter time frames, also potentially dipping at market open, maybe a little bit of choppiness there. But into the next year, into this next few months, still looking bullish up into that $70 plus range. Things look good for IREN in the long term. So that's how that looks currently. Guys, I appreciate you all. Thanks so much for tuning in. If you guys want to tune on into our daily live trading session, we'll be there tomorrow morning, as we are every morning, Monday through Friday. And I look forward to seeing you all there. If you would like to tune in, it's going to be the second link in the description below. If I earned your thumbs up, hit the like button. Do consider subscribing. I'll see you guys in the next one. Thanks so much for tuning in. Steve, Randall, appreciate you. And Shaw's, Ian, Jeff, just appreciate you all tuning in. Thanks so much. And I'll see you in the next video. Take care for now. Josado says, what are your thoughts on gold? Yeah, we have some companies I'll be coming out within the mineral space that we're invested in. I'll get those out to you here, Josado. Or I'll let you know in the market live session tomorrow morning. I know you're a stockmate, so we'll see you there. Appreciate you all.